Welcome back. You're watching Stock Watch with me, Zinati Kuma, and joining me to unpack your stock-related questions tonight are Gary Booysen from Rand Swiss and Shane Watkins from All Weather Capital. Be sure to send your questions via email to stockwatch@bdtv.co.za or via SMS on 41392 or on X @BusinessDayTV using the hashtag StockWatch. All right. Well, Shane, thank you that you are here. We're still waiting for Gary to join us. But, in terms of what the markets are following, in the macro economy, we did have, of course, the Fed coming out with its latest interest rate decision. Welcome, Gary. I'm quite surprised at the market reaction today, particularly the US, where it seems that there's quite a lot of optimism, even though the commentary was that the Fed does not have enough confidence yet to start looking at interest rate cuts. Is it just all because there just wasn't a hike?
So, Zanati, yes, I think your assessment is right. And you're absolutely right in your interpretation. I think what the Fed said is that there's not enough evidence emerging in the last 2 months. And remember, they have a meeting every 2 months. There's not enough evidence emerging to show that inflation is moderating or returning to the 2% band that they have in mind. And but that in the language they used, there was no reference to the potential for a rate hike. The language was more that rate cuts would be back-end loaded this year, I guess. But that is a change because I guess if you go back 3 months, we were looking at 3 interest rate cuts in the United States, and now probably the markets are only pricing in 1 towards the tail end of the year. And the Federal Reserve and whatever they do does tend to determine global market interest rates. So it will delay rate cuts elsewhere in the world as well. It's unlikely anyone, including our own Reserve Bank, will move until the Fed has moved on rate cuts.
All right. Well, let's get straight to the questions that we have had today. There's a question on Apple, and of course, Apple is coming out with results later on tonight in terms of, the stock being under pressure lately. And really, Gary, what we can expect from Apple tonight?
Well, I don't know what we can expect from Apple tonight. We're going to have to see what it comes out with. I think what we are probably going to see is that that the Chinese sales figure is going to be absolutely crucial, as we're seeing in so many of the businesses that have reported in this earnings season. So, we want to see that there could be a potentially sizable drop in iPhone sales in China. If that's the case, I think you're going to see the stock under a little bit of pressure. Obviously, all the kind of US-Chinese tensions are not helping things, and I think that's going to be crucial. But then also just I don't know, looking at I suppose also like the ability for them to, I suppose, deliver on earnings and revenue in spite of the kind of quite stretched valuations of some of the Magnificent Seven stocks. So it's been a very, if you look at the tech results so far, it's been very, very disparate. You've had the likes of Google shooting up 10% on the back of, optimism around AI spend, but you've got Meta down over 10% on their earnings release just because they gave, slightly negative guidance. So very, very difficult to tell what's going to happen with Apple stock today. I think China is going to be key for them, but I would probably expect large volatility in the stock one way or the other. It just really depends, I suppose, on the commentary and the outlook that they give.
Yeah, quite stretched valuations, but of course we're seeing now that chart that stock has been under pressure. Shane, would you say that maybe this, is a buying opportunity? What is your make and outlook of the company?
So Zanati, look, Apple's the biggest company in the world, and the US market is quite stretched. I mean, the NASDAQ trades on roughly a P of about 38. That sort of means that it takes you 38 years to get your money back if you buy the share today. The Apple valuation's mid to late 20s. The question is it still a growth story, and can it be a growth story given the size of the company? I think the market cap is north of $3 trillion now. And then Gary mentioned another factor, which I think is really important, which is that the China issue. Now, 85% of all Apple phones are made in China. If there's any severe interruption in the relationship between the United States and China, that will be disastrous for Apple. They sell about 1/3 of all their phones there, and most of their phones are made there. So they are exposed to geopolitical events, around issues like Taiwan and so on.
All right, I hear you. So, of course, we'll be getting more of those details when those numbers come out later on tonight. Let's take a look at Anglo American. Quite a few questions coming through there. Could you indicate which one, a buy, hold, or sell for Anglo American at today's price, 616? What would be your recommendation, Gary?
Well, I suppose it's also that's a very difficult question at the moment because we don't know what's going to come back from BHP, and we don't know what this is an incredibly complex transaction that might be happening but might not be happening as well. So the idea that there's going to be a takeover and an unbundling of, we've even got the presidency involved saying that market commentators have been too negative on the South African outlook. But the idea is that Anglo American probably, if there is a transaction with BHP, is going to be a very different looking business in a couple of years' time. They're going to have to unbundle Amplats. They're going to have to unbundle Kumba as well. That does look like a sticking point if BHP is going to come back with kind of elevated offers. It doesn't look like they're going to get away with that because BHP is essentially after the copper assets. They want the Chilean and Peruvian copper assets, and you understand why as well. It's got nothing to do with BHP doesn't want to work in South Africa. It's got to do with copper is an incredibly important mineral in the electrification of, let's say, the global car fleet, and the more we move towards battery technology and away from fossil fuels, the more important copper is going to become. So you can understand why they're positioning for it. But is Anglo going to see competing bidders like Glencore coming in? It's also possible. So I think an exciting stock at the moment. Very difficult to put an actual valuation on it. For a long time we've held BHP over Anglo American. Just for many reasons. I think we prefer the asset mix if you're looking at a diversified, but typical merger arbitrage says if you're going to be acquired, you buy the stock that's going to be acquired, not the stock doing the acquiring as well. So that thesis probably does need to be revised. So not really giving you a straight answer on this one, but I would probably, I think we've seen a lot of share price appreciation already in Anglo American compared to some of the other mining stocks. So I'd be a little bit more cautious on Anglo just with the transaction kind of in play at the moment. Shorter term, I'd probably wait for a little bit of a sell-off before entering.
It's quite a difficult one because I was also talking to someone that literally let go of Anglo a month before the announcement of this potential deal, and they actually went into BHP. Of course, they don't regret going into BHP, but I guess in terms of short-term gains, it is kind of a little bit of a regret. Shane, just Anglo, I know if I remember correctly, you hold. Would you still be piling up more? And if someone missed that boat, would you say that they have missed the boat if they weren't in Anglo American before this announcement?
So Zanati, I think probably, as Gary said, you want to be in the company that's going to be acquired. And I think in a sense, they have crossed the Rubicon here. They will either be acquired or they will do some value unlock themselves.
Okay.
There's no going back to what it was yesterday for Anglo American. So I think they are now under severe pressure from shareholders to do the one or the other. Even if BHP doesn't come and Glencore doesn't come, they will then do the value unlock themselves. So I think it's highly likely that, I think it's a buy. And I would say that, the 550,000 tons of copper that they produce a year, or that they will be producing when their South American projects come up to speed, is close to a unique resource.
Well, there's a question on Anglo American in relation to Amplats. So the viewer says, I bought Anglo American at 473. I'm 36% up on today's close. Should I take profit now? It still has R7 per share dividend in it. It's about 25% of my holding and is countering my 23% drop in Amplats, which is also 25% of my portfolio. Would you exit Anglo American now and buy more Amplats? Gary?
I probably would. If you know, again, it sounds like quite a speculative portfolio, and it of course depends on a lot of things. You know, if you've got 25% of Anglo American in your portfolio, you're pretty concentrated in there. I mean, we would never, you know, in a diversified portfolio for clients, we never take any position above 10%. So
Yeah.
it's good. You know, I'm making a lot of assumptions here, but you know, with the you know, and I'm making an assumption this is also quite a short-term speculative type portfolio. So you know, with the run-up in Anglo American, as I said, I think it's a little bit hot just now. You know, when they say when it's in the press, it's in the price. You've already seen the move in Anglo American now. You've seen the big fall in Amplats. The expectation around the fall in Amplats is that you know, if it was to be unbundled, there's going to be an overhang. All the shareholders that have Amplats unbundled, that were Anglo American shareholders that eventually get Amplats, they might be selling down those positions. I've got a kind of a different thesis on Amplats. I think that, you know, I mean, we've already seen, you know, a scrip recall, there's potentials of a scrip recall when the announcement was made. We already saw short sell, at least shorts being cancelled by a lot of the banks as they need to get the scrip back in. So I have a feeling that there could be a potential short squeeze in Anglo American Platinum, you know, because it's not a popular stock at the moment. The short interest is quite high. And if you see a lot of people having to buy back because, you know, the banks essentially need to recall that scrip, you might see a little bit of an you know, an upside pop on the stock as well. So you know, if it's a short, you know, if it's a short-term trading account, I would probably say sell the Anglos, buy the Amplats. Even you know, if you're looking for a new pair, sell the Anglo American and buy the Amplats and look for you know, a return to mean on both the stocks and kind of put on a pair. But longer term, I'm pretty negative on Amplats, I'll be honest. Like, that's a short-term position. You know, Amplats over the next 5 years, I think is going to, you know, find it very, very difficult. You know, our kind of preferred platinum play is Sibanye, but I mean, I think platinum is going to have a very, very difficult time longer term, especially with the move towards EVs. Almost, you know, just under half of, you know, PGM market is made up by the auto cats. If we're changing the way that we treat mobility, you know, on the planet, this is going to have a huge impact on the platinum producers and the PGM metals. So, you know, 10, 15 years out, I probably don't want to be holding Amplats. Going into a transaction like this, I probably would be holding Amplats.
All right. What is your take on that, Shane? Gary gave us quite a few scenarios on how the Amplat stock could play out depending on what happens with the Anglo American BHP potential deal.
So Zanati, if you long Amplats, you're kind of taking the view that the BHP transaction doesn't happen, right? Because if the BHP transaction happens, then Amplats will be unbundled. 80% of the Anglo American shareholder base is offshore. They can't own Amplats, and there will be forced sellers, and the Amplat share price will get, there'll be significant downside. So in a sense, you know, he's got a barbell portfolio. The Anglos part is saying that the BHP deal goes ahead, and the Amplats part is saying, well, the BHP deal doesn't go ahead. And so in that sense, the portfolio is slightly inconsistent. But I mean, in any event, I would agree that 25% in either of these counters sounds a large position. If I had to be in one, I would be in Anglo American, not Amplats.
All right. Well, let's get into more questions. Sasol and Netcare, how low will these go? Are they a hold? Quite different ones and different headwinds for both of them. Let's start off with Sasol. Gary, how low can Sasol go? We also saw it under pressure today, I think by about 3-4%.
It's amazing how much value destruction has come through from Sasol. Now losing its CFO as well. I think he'll be leaving 31st of October.
Yeah.
It's again a difficult question. So I mean, how low can it go? I suppose it can go to zero. That's what any stock can do, and that's as an equity shareholder. That's what you've got to, you know, brace for at some point. I don't think that that's going to be the case. I mean, if we look at kind of historical figures, I mean, if we look at all the way back to kind of 2020, I mean, we were going, Let me just pull this up now. But I mean, we can probably get lower than we are now. I mean, I think you could probably see Sasol sub 100, but at the same time, you kind of also understand why this is happening. So remember that there's been about a 20% drop in in chemical prices internationally as well. That's going to put downward pressure on the stock. I mean, actual oil prices have been quite quite stable thanks to, well, not thanks to, but owing to the conflict that we're seeing and the tensions in the Middle East. That seems to be now settling as well, which I think is putting further pressure on Sasol. And of course, it's a heavy polluter as well. Yeah, I mean, if you look at the Sasol, part of Sasol is I think the single largest endpoint polluter on the planet is their Secunda facility. So I mean, they are they are not well positioned into a greener kind of ESG future either. So you can understand why the stock is under a lot of pressure, but at the same time, at what price is their value as well? It is obviously quite critical. In South Africa, we need to have fuel. We need to have energy. We have an energy crisis going on at the moment. So it's obviously uniquely positioned to assist there, and obviously has had some positive news flow around the court case that they've just won as well, which did see the stock pop about 10% on that news, but has since unwound. I'm also not giving you a straight answer here, but I mean, should Sasol be in your portfolios? I think it is quite a speculative position. It's not the blue chip Sasol that you would have thought about 10 years ago, or even probably 15 years ago as a cornerstone of a portfolio. But it is a fairly speculative play on oil markets and energy markets that's accessible to local investors. So yes, understand why it would be in portfolios. I would probably take a small position in Sasol at these levels because it does tend to be very cyclical. And I think if you see chemical prices going up, you see the management team changing, and you see slightly better, steadier management, the company in steadier management hands. I think it can do a lot better.
Okay, quite interesting. A small position, maybe. And actually, just as you're talking about how it used to be a blue chip company, there's a comment from a viewer here. What a fall from grace for an icon and once very blue chip company. Sasol is uninvestable, and saying that the Executive Vice President for Operations resigned last month without Sasol announcing it, and today the CFO resigned, which they did announce. Of course, I think, if I remember correctly, Shane, you've also had some criticism for management there. Are your views still the same? Do you think that this has been a dismal fall for Sasol?
So look, I mean, Gary's right. If you look at the Sasol share price, it's now 130. It was 260 Rand 6 months ago. It was 400 Rand 3 years ago.
Whoa.
The Sasol share price is now back where it was in 2005. These are 2 lost decades, okay? And I think, there's a whole range of problems that superpositioning of problems. I mean, in the first instance, the business model is challenged and they have ESG issues mainly because of the, pollution issues. The model is challenged. I mean, in terms of their gas to liquids plant, which is a sort of an aging process, it's very pollutive. And then, as I've said before, I think that they don't have a particularly talented management team, or certainly not based on the evidence that we can see if you look at the share price and the outcomes in earnings. So, if you overlay a complex business model with management team that is not particularly shareholder friendly, it's improbable you're going to get good outcomes. But from here, the 130 Rand, it's probably on a PE of about 3.5. I would guess that most of the bad news is priced in.
All right. What about Netcare? How low will it go? And would it be a hold if you are already in it, Gary?
I think this is a question for Shane more than me. I think he covers Netcare. I kind of look at Netcare from the sidelines. I don't actually invest in it.
Okay, no, it's fine, Shane. And actually quite interesting, I guess you can maybe talk about just the broader healthcare space, because even today we did see Life Healthcare coming out with a trading statement, seeming that the growth in revenue didn't translate through to core profit. We also saw that share slumping 7%. So just Netcare, and maybe your thoughts on just the general healthcare space.
So, sadly, the share price graphs don't look hugely dissimilar to Sasol. I mean, the Netcare share price is back where it was in 2008. I mean, that's unbelievable.
Yeah.
The life healthcare share price over the last 10 years is down 60%. I mean, it's hard to believe that life healthcare got to 41 Rand. I know they paid a special dividend, but I mean, still, they've been appalling performance, both of those companies. Now, the South African listed hospital space used to have 3 companies, Mediclinic, Life and Netcare. Mediclinic was delisted by Remgro, so now we're left with these 2 players, Life and Netcare. Again, it kind of comes back to the same question that we were asking on Sasol. How much of the bad news is priced in? So what are the issues for hospital groups? The economy is not growing. For the last 10 years, the South African economy has grown less than 1% on average. So the economy is not growing, and the people that can afford to go to private hospitals is not really growing. Then I suppose you have to add in the fact that their operating costs go up every year, even if their revenues don't. And you have the threat that NHI might be implemented in some way that is unlikely to be positive for any private hospital group or hospital funder. The margins on these companies have gone from almost 20% down to 15%. That's what Life is reporting. Netcare is a bit higher. But, I guess what do we need from here? We need a little bit of better news on NHI, which would be that it's either watered down or doesn't happen. And we need these companies in terms of their patient days to start to increase. And we need the margins to tick up towards 20%. I mean, both of these shares are quite cheap. They're both on 10 PEs or thereabouts. So I'm going to say what I said on Sasol and say that the damage is done, the bad news is priced in. If you believe that there's a reasonable election outcome that doesn't result in populist policies, I would say Netcare and Life Healthcare are goodbyes now.
All right. Well, what about DRD Gold? Panel's view on DRD Gold negative on the month despite current gold prices near all-time highs. Is it a buy at current levels? Biggest dividend payer amongst gold miners yet hasn't rallied at all. Gary, what do you make? Because when the gold price goes up, DRD Gold, of course, follows suit. But obviously, a lot of people have said that they trade these gold miners on the short term. So DRD Gold, what do you make of the pressure that we have seen so far, considering that it is a good dividend payer?
I think, you say it hasn't reacted as aggressively as some of the other ones, but I mean, it does move in tandem with the gold price as well. So you've got to remember also, like when you're pricing these stocks, you can't just look at the US dollar gold price. You've got to look at the rand-based gold price, and we're in quite a unique situation. It's one of the reasons. I mean, okay, not speaking about gold, but I mean, we've got running basically a managed TFSA and equity and ETF portfolio for clients, specifically to hold in TFSAs. I mean, we're looking at it today. It looked like an amazing opportunity. We've got this weird situation where the rand is stronger, but you've kind of got US markets down at the same time, and that's providing a very nice entry point. Now you're kind of feeling that in the gold market as well. Like the gold price has actually subsided a little bit, but the rand has got significantly stronger, which is taking a lot of shine off all the gold miners, DRD included. You look at Gold Fields, Anglo Gold, etc. All of them are coming down fairly hard. So. Yeah, I don't know. I think if you're bullish on gold, all of this obviously feeds into the interest rate expectations, and you guys were talking about it at the top of the show.
Yeah.
But Powell came out and said we probably won't hike interest rates, which is an incredible thing to say. He doesn't see the stag, he doesn't see the inflation. But really, I suppose the thesis behind gold and behind buying a gold miner is that inflation is going to remain high, but the Fed is going to blink, and you're going to see interest rates coming down in the face of high inflation. That's the environment where gold absolutely goes berserk.
Yeah.
Why would you hold something like DRD over going and buying a Krugerrands or buying something like the new gold ETF? You'd buy it because you want that operating leverage. You want the gold price to shoot up, the costs are fixed, suddenly all of that just falls straight to the bottom line, and you get this huge kind of exaggerated move in the share price. So I don't know. I think that the Fed is, they seem quite set on conquering inflation, and it doesn't. Everyone's been talking about, of course, there's going to be rate cuts ahead of the U.S. elections, and at the moment, I mean, if I looked at the pricing, on the Fed, at least on the Fed funds futures, we're looking at one interest rate cut this year. So I would say be careful of buying DRD Gold and all the gold miners at this stage.
Quickly, gents, let's get to your stock picks. 20 seconds each. Shane, what are you picking?
Picking Datatech, it's an IT services and hardware company. The share price is probably about 50% undervalued. The share is kind of 36, 37 Rand. We think it could easily be worth 70 Rand. And it's on a 5.5 PE, and Jens Montanana, the CEO, owns 10% of the company. So in terms of sort of behavioral finance, the CEO is in the same boat as you. So, I've always said, show me the incentive, I'll show you the behavior. Jens is as keen to get the share price up as what we are.
All right. Gary, what are you picking today?
I'm going to go with Equinix. It's an interesting company. I don't know if it's a buy or not, but I just think it's interesting because they're going to be reporting, very, very soon. The stock price has come off, significantly, but we've got a price target of above $900 a share. We're kind of trading sub 700. So it looks like there's about 30% dollar-based upside here. One of the reasons that the stock has come off, one of the short selling firms, Hindenburg Research, has come out with a short sell on it. So we've seen short interest building massively, and they kind of saying there might be accounting funnies in here. If I had a look at it, I don't think so, but it's all going to come down to what they say in the results now. I think they might address it because it has come off. If you don't know the company, it's essentially a real estate investment trust, a REIT, that owns data centers. It's one of two large data centers. They're actually doing a big investment into Africa and South Africa, about 7 billion Rand total, but they truly diversified multinational company that essentially manages data centers in a REIT format, and gives you, I suppose, access to a very exciting theme, which is AI and the growth. Instead of buying the chips, or instead of buying the likes of OpenAI through Microsoft, here you just buy essentially a data center, banking on the fact that we're going to see a lot more requirement. So I like the company. 2.5% dividend yield, but we have to see what's going to come out in these results, and I think it's one to watch closely because I think.
Thank you so much, Jens, for your time and for your analysis today. That's all for tonight's Stock Watch. Thanks to our guests, Gary Booysen from Rand Swiss and Shane Watkins from All Weather Capital. Up next, the close. Stay with us.